All right, so today as we jump into the market, the biggest catalyst mover that we've been talking about for the past 3 to 4 days has been this man right here, Jerome Powell. And I think that this definitely has set the tone, at least for the next 2 weeks. Now, he did say there's something that you need to be watching specifically to be prepared and to really get a better understanding of what's going to happen at that next Fed meeting. However, there's a lot we need to talk about. Also, going into this, what I will say, this link will be down below. This is basically where Elizabeth Warren and Powell talked today, and this was the most interesting, in my opinion, conversation that was had, or argument that was had at this testimony, and I'm going to go over exactly why. We also need to discuss what happened here on the charts, where we came into perfect rejection out of supply here on ES. Nasdaq got a little bit above that supply, obviously, but then also rejected at the 12.4 key level. There's a lot of big things here, but there's one big play that I've been telling you guys for a few days, and as we come back to the charts, let me tell you, it looks glorious. It's performing beautifully. Mucho gazpacho espicasso. It's beautiful. That's Italian if you didn't know. Before we go into that, I have to ask you to do two things. Consider liking, consider subscribing. Every day here on the channel, I'm making videos for you, so you are prepared. We did take a little bit of a hiatus, had to take a day off, but now we're back to the grind as usual. The videos are here, so you are prepared and you understand what trades I'm taking, if I lost, if I won, etc., everything in between. And on Saturdays, we have educational videos now coming out, so check those out if that's what you want. Now, we did just have the newsletter drop, and I have to, shout this out right now. Right now, the $30 tier you asked, and we opened a few more spots. There's 25 available. After those close, it's going to be shut off again, most likely for another month and a half, 2 months, or if someone leaves. So right now, take advantage. The $30 tier is available. We don't even have the full access normal tier for $60. That's not available right now. Those are totally sold out. So again, be on the lookout for when those come back available or if someone leaves. But for right now, that's the only spots that are available. Take advantage. Let's get to this. Now, obviously, as we look at what's happening here, and actually, before we go too far, I'm just going to tell you right now, if you're on Twitter, congratulations, thank you. I appreciate all the kind words. We first vacation here on the channel in probably year and a half, roughly. Just got engaged, but that's cool. Great news. Thank you, kind words. Appreciate all the comments. I know everyone's going to leave. Again, back to work. As we get into this, though, what are we talking about? What are we looking at? Now, Powell had a lot of things to say, and I can go into what Powell was saying. And the biggest thing that was a concern with what he was saying is, one, it was a lot of political views, which I want to ignore all of that. We talked about the debt ceiling. He said that it'd be catastrophic. Obviously, they don't fix that, which they're not going to right now. But the biggest thing that he has a say on right now, or at least has been mentioning to all of us, and we've been talking about it, it's the job reports. It's unemployment. It's the big concern of what's fueling inflation. We already know it's not a supply chain inflation no more. Jobs are fueling this. Now, he anticipated at their last Fed report that by the end of the year will be around 4.5, 4.7% on unemployment, rising over 1% to the upside. Now, that's pretty moderate. That's not even that outlandish. But if you watch this video, it's like 5 minutes long. They can only talk for 5 minutes, each senator. So you need to understand that it's not very long, but I recommend watching it. You have the radical left. It's absolutely crazy. Don't say, hey, Tyler, you must be a far right Republican. No, I don't really care. If anything, I'm a capitalist. All I care about is making money. Sue me, call me the devil. I don't care, right? But if we're looking at what's happening and give you just a little bit of insight, you have the far left saying we can't have unemployment go up. I'm just like, again, if we look in the past cases, there has never been a point in time in which inflation has cooled while unemployment has not rose. Never in the history of times. All the way back to as far as data we have, Adam and Eve, whatever it may be, Samaria, I don't care. The first log of economy. Economics 101. They teach you it, okay? Obviously, Elizabeth Warren did not learn that. So I think that's the best conversation you can listen to. But ultimately, what Powell said is unemployment's going to have to rise. Yes, that's going to cause at least 2 million people to be out of a job here in America, but it's going to rise, okay? That's going to happen. He also signaled that they're going to start raising rates even further. He signaled that most likely their target rate of 5.25 to 5.5 will jump up. Okay, so those are all going to rise. That was bearish for the economy, obviously. And we'll have more information coming out tomorrow. I just wasn't able to dissect all of it today because I was on the road getting back home. But nevertheless, let's go over these charts. Now, again, before we even go over the juicer, right? Before we even get into the good part, I want to discuss something real quick. Tesla, right? What have we been saying about Tesla? Okay. I've been on the mountain. I've been a little bit out of ways. I haven't been, obviously here for the past 24 hours. But what did we say about Tesla? I said it on Sunday. I said, keep your eyes open. You're going to get an opportunity. What happened? Come out of the gate. Weakness all day yesterday. What did I say? Now, going into Discord, if you're in Discord, obviously, I only usually post my swings, and then the day trades I post, in the trade idea section, right? But if we look, we got some interesting information here, right? What did we say yesterday, right? We had that loss on NVIDIA, but we bounced back. What did we say? Powell's going to be speaking right here, right? So this is yesterday at 9:03 a.m. I won't be active today or tomorrow. Jay's going to be in control. I'm looking to get back into Tesla 190 puts April 21st. They're currently 14.3 to 14.5. They ended up actually dropping in value to around 14 or sub 14. Then they're around 13.9 roughly. Would finish position by tomorrow after listening to Powell. Don't want to have a large position before Powell speaks, but I'd be fine getting 5 to 6 of them prior. Currently have about 15 of them. Those contracts ended the day around 17.3. They hit highs in the beginning of the day around 18.3 also. So those are sitting pretty. I'm pretty heavy into those. And then Jay Ream ended up adding to his 170 position. As we look right now at Tesla, absolutely glorious, beautiful chart going on right now. Now, you could even argue, and I don't think this is a head and shoulders, so don't attack me because I know those guys are going to attack me. But I'm going to tell you right now, you could argue that the head and shoulders is intact. You could argue. I'm not trading it because of that, but it's pretty beautiful. You would prefer to have the head a little bit larger. That's what she said. But as we look at this, you have to understand it's a really nice setup. You also got rejected right at that level at 200 again, making lower highs continuously, even when the market was trying to show strength, right? So I believe if you make a new low and get below 187 and make a new low below 186 roughly, you have the potential to flush down towards 170. Maybe even 181 on the conservative viewpoint, right? But I'm going to tell you right now, I'm sitting in it. I'm sitting pretty. I'm happy. Golden. Tesla, been trying to preach, been trying to say this. Costco as well. Remember I told you guys on Sundays, like if anything to the upside, you've had a perfect push up. Also, if you're looking to sell, you had a perfect touch of the 200 SMA. Beautiful position there. Congrats. Going back though to what's happening on these charts here, because what matters the most, it's futures, right? We're not going to sugarcoat it. The most important part of this market will always remain under futures, right? So we need to know how these move. Now, obviously, you hit that supply. It's invalidated now, and you got rejected. Now, someone in Discord also noted that you did have a head and shoulders form out here on NQ. And let me tell you, it 100% formed out, and you're probably looking to at least come down to 12,000. So you're getting rejected, pushed down now. So supply, this has been invalidated, but nevertheless, you still got rejected, pushed down there. ES definitely gave you a more respectable trend here, also with the head and shoulders there, but getting rejected from that region, pushing back down. All eyes, where are they now? Again, the 200 SMA, that's our new support. That's our support we need to be watching. On NQ and ES, you could argue that you have a demand kind of trying to establish here on the 4 hour. For ES, you could argue, right? You could really make the argument, right? That you're trying to form it and that you're there right now. But again, I'll leave it up to you. It's a little bit hard to say because you only spent so much time. But right now, I would argue that it is a demand, but I don't think it's going to hold in significance to where we're going with the 200 SMA. That's my focus right now. Same with the Nasdaq. You have a demand down here, but I still think you have lots of room to drop here on NQ. The 200 SMA is not that far off from it as well. ES definitely took a large chunk of the damage today with a lot of the pain that we had towards the downside. Giving you a visual though, what have been the big indicators? I do want to go over VIX because I think it's important. But what have been the big indicators here, right? When VIX drops down to like $18, $17, it's been almost a must-buying opportunity, basically going all the way back to 2021 before the recession even hit. 16, 17 was there, but like 17, 18 during this time has been the real juicy point, if you will. We start to get a better look of, ultimately where this area is. And as you look, you've just bounced out of this region. So far you're getting a little bit of that same love and that bounce coming in here. Again, where I become very bearish on the market of saying possibly new lows being established is if we start to mount the 200, or not the 200, sorry, the $24 region on VIX. We have not mounted that in a long time, going all the way back to previous before November. Last time I had a bounce or hold above was in September, was when you pushed back to the $34, $35 region. So again, 24 is a level that I'm looking for us to get to and sustain to find new lows. But until then, right now, you're still getting a little bit of a bounce. But the biggest indicators, in my opinion, we've had the DXY and the yields. The yields are the best indication of an unhealthy market. When we look at the DXY, what did we say on the daily time frame? There was a clear bull flag. You're breaking right back up. And like I said in the previous videos, we're targeting the 200 SMA around 106.5 roughly. So about $1 of upside on the DXY. And we've been seeing some really good structure established with what the Fed has been saying here. Now going over to yields, the complete inversion, the 10 and 30, I'll go over those yields more in depth alone here in a second. Now, since, I've been off for, past 2 or 3 days, or 2 days roughly, obviously we're still making higher highs here on the US 10 and 30 inversion. If you actually zoom out, you can see that it's a clear ascending triangle to the upside. Pretty bullish, pretty incredible, very concerning to say the least here. Now, when we look at local highs, roughly 1.05 that we had back in September, I will say we're a little bit of a ways off from there, but you're still above basically 2018. You're above the housing bubble that you had back here. And then you're also above the almost to the inversion that you had back in the .com bubble, right? So very big and worrisome track that we're here now. The 2-year spiked over 5%. The 10-year is working its way back over 4%. The 30-year just showing weakness and weakness and weakness. So that's my opinion there. A lot of concern on the broad market and the health of the market right now. TLT, another thing I want to talk about here. I am looking for this to get back below 100. Ultimately, you're kind of just trending sideways here. Now, what I will say is NQ has not had a lot of the damage that we've seen on SPY. Okay, so ES and SPY are taking a lot more damage than the Nasdaq and Qs. So this is still a decent area, right? Where do we get confirmation is when the Nasdaq really starts to get hit, because when big tech starts to get hit, then ultimately the market just starts to usually roll over. And so right now TLT is holding at 100. So you still look halfway decent, but again, Powell still talks tomorrow, and I don't think it's going to ease up on the pain. Now, as we go a little bit deeper, showing you the big six, which I think we have to be watching. I showed you the potential of that bull flag. You broke out of it yesterday, and then you came right back into it today. Now, the big six, I think the big level you got to watch. I mean, I'm not really watching the 200 SMA here. I'm really just watching the $1,000 point here on the big six. The big six, if you don't know, I just made a mini ETF. Apple, Amazon, Tesla, Google, Microsoft, and Nvidia, like our biggest names out there right now, and giving you a better viewpoint of equities. Because sometimes we see the indexes move, but equities don't really line up with it. For instance, going back September through November, we just range traded and chop. Since January, equities have gone on a moon mission, right? So it's important to identify if we're actually moving on equities or indexes moving inaccurately or giving you the wrong viewpoint of what's happening with those equities. So that's where we're at there. And that's really the concern for me. So need to get back below 1,000. So again, my viewpoint here still remains to the downside based on what Powell said. Now, the interesting thing here about what Powell said and what can be concerning is that Powell made it really clear. He said a lot rides on the next pool of data that we get. PPI, CPI, PCE, right? And the upcoming data into their next meeting, right? I believe it's like on the 22nd, their next Fed meeting. You can Google it real quick. I'll have it for you tomorrow for sure. But he said that data pool is really going to matter, because if it comes out that this data pool rises again and then we have higher CPI again and it's, another heater, and this is going to be bad. It's going to be very bad, because it's going to show that it was a blip to the downside. And so what does that mean? If inflation was spiking and spiking and spiking, and then we finally had good data for like 1 or 2 months, that's just showing that it was an irregularity and that we're actually spiking back on inflation. And there's a high percent chance that you could have the possibility of inflation becoming entrenched, which Powell has already said, well, what happened if that becomes the case? He also made it very clear, though, that no matter what, they're going to continue raising rates. They are not going to pause. They don't care about their fear of people losing jobs and the far left thesis. They don't care about that. They could care less. They are worried about the overall health of the economy, which, again, we're going to say time and time and time again here. That's all the Fed cares about. They don't care about the debt ceiling. They don't care about the treasury. They want to make sure at all costs that they're doing their job to keep the economy stable and in line of future growth and overall just healthy. That's their goal. They have no political agenda. And I think today was the best example of that. You've had a lot of people and a lot of conspiracy theorists come out and say, well, they got to do this, or they're working in cahoots with the left or the right, whoever it is. Today, I think Jerome Powell answered every question perfectly. I think it was probably the best outlook that we've ever had from Jerome to really show that he's a neutral party. And I really encourage people to get out of this thesis of saying, oh, well, there's a conspiracy theory, because ultimately the only person that you're helping in that case is the market makers, because you're probably losing money over and over again, right? This is not me to say I'm right, you're wrong. This is to try to help you in the best way possible. So I really encourage you, instead of trying to play this, genius person to understand something that everyone else is missing out on, try to just play what the market's giving you. I'm just saying, if you look at the channel and how we've tried to play this and the results that we've had so far from playing what's been given to us, what's been said, and then predicting based on that, or playing safe based on that, it's worked out extremely well over the past 2 months specifically. Now, I can go back over the past 8 months and show you, but just in the short term, if you've been here at all, that's why we focus on this. It's not to get rich quick. It's to make money and show a strategy that works time and time and time again. Sometimes you got to be patient. You don't want to trade that chop. And right now we're getting that opportunity once again. Now, again, I will say, what is Powell pointing us to now? He's saying that, one, we're going to continue these raising rates. The ceiling's probably going to rise on those. Inflation could be in trouble, but he said a lot lies on this next data pool. So that's what all eyes need to be on. Now, again, tomorrow will be important, but I think we're bearish into the next data pools, right? Maybe we're not dropping with extreme volatility, but what I will say is that there's a lot of concern and a lot of uncertainty on the market. So until the next readings come out, we gotta be on our toes, okay? Unemployment, we know that's not going to be spiking up anytime soon right now. It probably will over time. But as of now, again, CPI, PPI, PCE, those next reports are going to be the most influential. Listen to Powell, but ultimately I have us on a downtrend until those reports come out at the very minimum. That's my take. That's what I'm viewing. If you have questions, comment down below. I would love to see those. I'll see you guys tomorrow, and I will be live again tomorrow, 10:30 a.m. Central, going over what Powell is saying. I'll probably be live a little bit earlier for the Powell speech. But anyways, we'll be live tomorrow. Have a good one, traders.